Property developer Mah Sing Group wants to go into gloves and healthcare, citing favourable long-term prospects and higher demand created by the COVID-19 pandemic. Its unit, Mah Sing Healthcare, will initially have 12 new glove production lines at a factory in Kapar Klang, producing up to 3.68 billion pieces of gloves a year. The first 6 lines will be ready in the second quarter of next year, with the remaining 6 to be onboarded by the third quarter. Once demand outstrips supply, Mah Sing will embark on phase 2 of its plan, expanding its Kapar plant to accommodate another 12 production lines and up annual capacity by another 3.68 billion pieces of gloves. The group says it has already signed letters of intent from several prospective customers, and cumulative indicative orders have already exceeded the estimated maximum capacity of both phases of the factory in question. Eventually, Mah Sing aims to have 100 production lines and be one of the country's top 5 glove manufacturers. The new business will mainly be targeted towards exports and is expected to make up at least 25% of net profit. Subject to all relevant approvals being obtained, the proposed diversification should be completed by the fourth quarter of this year. Equity National-backed MCAT box office, more commonly known as MBO Cinemas, is facing liquidation following cash flow problems since the implementation of the government-imposed MCO. According to a notice to creditors cited by The Edge, its board of directors passed resolutions yesterday, placing the company in creditors' voluntary liquidation and appointing PricewaterhouseCoopers Advisory Services as interim liquidator. The notice also calls for a meeting between the creditor and the interim liquidator to discuss the liquidation process. In a liquidation process, the company's assets are sold to repay creditors and the business closes down. According to CTOS data, as at December 31, 2018, MBO Cinemas' total assets were valued at 197.76 million ringgit, while its total liabilities stood at 111.31 million ringgit. MBO Cinemas is the third largest cinema chain operator in Malaysia, with 27 locations and 207 screens nationwide. However, according to its Facebook post on Monday, only 4 locations are open as usual for now. In August, MBO Cinemas COO Chia Chun Wai was quoted in a Bernama report as saying that the industry suffered a 55% drop in sales during the first 3 months of the outbreak and no sales at all during the subsequent 3 months due to the MCO. Malaysia Aviation Group subsidiary Firefly Airlines will start its jet operations in the first quarter of 2021 as it realigns its strategy to adapt to a world changed by COVID-19. According to a statement issued today, Firefly will be adding up to 10 narrow-body jets to its fleet in phases, serving the domestic, ASEAN and Asia-Pacific markets out of Penang International Airport. MAG Group CEO Captain Isham Ismail said, based on available forecasts, domestic and short-haul travel will be most preferred in the current environment. Hence, it makes commercial sense for Firefly to supply this demand, but from the northern region. With this, Firefly will be complementing sister company Malaysia Airlines in serving the leisure market, while diversifying its base, connecting secondary cities in Malaysia to East Malaysia, Thailand, Indonesia and Singapore. It will leverage on available resources and talents from within MAG, with the possibility of deploying the Boeing 737-800 aircraft from Malaysia Airlines, which gives the national carrier room to focus on its network serving the premium market. Firefly CEO Philip See said the company sees strong potential in this dual hub strategy while maintaining its turbo propeller service out of Subang Sky Park. The US Department of Labour has now put Malaysian-made rubber gloves on the list of products that use child or forced labour, while Top Glove Corp has yet to resolve its labour issue with the US Customs. This raises the question as to whether Malaysian glove makers are losing the sizable US export market as a result. Investment analysts, however, shrug off any such concern. They point to the continuous strong demand for gloves with the ongoing pandemic, even though the US is a sizable market to the glove manufacturers. According to a local analyst, there is no near-term impact on Malaysian glove makers, other than bad publicity. Still, the inclusion on the list of using child labour or forced labour may be another blow to the industry after bans on Top Glove and WRP Asia Pacific's products. WRP's ban has since been lifted in March, while Top Glove says it will pay 136 million ringgit to compensate its migrant workers as part of its efforts to resolve the issue. Still, the world's largest glove maker has yet to resolve the matter after more than 3 months. Top Glove shed 1.48% to close at 9 ringgit and 34 cent today. Supermax Corp fell 0.94% to 10 ringgit and 54 cent. Harta Lega Holdings ended 0.55% lower at 18 ringgit and 6 cent, and Kosan Rubber Industries was unchanged at 7 ringgit 98. Lpi Capital says its third quarter FY20 net profit slipped 1.87% to 86.18 million ringgit from 87.82 million as its revenue fell. The group told the Bourse Exchange that top line dropped by 6.63% to 395.76 million ringgit from 423.84 million ringgit. This is largely due to the investment holding segment, which registered a decrease of 96% to 600,000 ringgit, compared with 15 million ringgit previously, as it saw lower investment income during the quarter. Chairman Tan Sri Teh Hong Piao said in a statement that widespread economic impact continued months after the COVID-19 virus was first reported, and this has been felt across multiple sectors of the Malaysian economy. Despite this, he said LPI still turned in a credible performance. Going forward, he said the various additional economic stimulus should further support Putrajaya's efforts to revive the economy.